Ethereum ETFs are massively outperforming Bitcoin spot ETFs, not something that most people ever expected, right? You would think that on a good day for Ethereum, it would go from 20% of the flows to 50. But the fact that there's days where it's double or triple the flows. We had a day recently where Ethereum, I think, had 300 million-ish in inflows, something in that ballpark, and Bitcoin had over 100 million outflow, right? So that's a pretty big gap between the two of them. I do believe 10,000 is possible. I don't know if that's end of the year, next March 2026. The time frame is relatively unimportant to me. I do think it's going there and much higher.
Scott Melker joins us once more. He is the host of the Wolf of All Streets podcast. We'll be talking about his views on the current crypto landscape. What is going on with alts? Is it the beginning of a new altcoin season, or is this the end of the bull market as evidenced by this run? We'll talk about it. We'll talk about Bitcoin treasury companies. We'll talk about Trump's holdings of Bitcoin, the whole gamut. Welcome back to the show, Scott. Good to see you. Good to see you as always.
So much. Thank you so much, David.
Scott's got a great channel. Check out his work down below. We'll be talking about some of his recent releases on his channel. Let's start with just performance, I think, is the one word that would sum up this next segment. Take a look at my screen here. This, I will show Bitcoin, and then I will show Bitcoin dominance, BTC.D next to it. And as you can see, over the last 3 months, Bitcoin dominance fell pretty much, like a rock compared to where it was in mid-June. Now, Bitcoin did not fall like a rock, so Bitcoin dominance falling just indicates the rise of alts. Why now? Why is it finally here, this altcoin season?
Well, it's interesting because if you've been privy to past cycles in crypto, your expectation in the 4-year cycle would be that Bitcoin goes up, it makes a new all-time high, it consolidates sideways, and altcoins go crazy, generally trickling down from large caps to mid caps to small caps, back to Bitcoin, rinse and repeat. A washing machine of capital looking for larger gains, but eventually wanting to get back into Bitcoin. We generally have not seen that this cycle, largely because the money that's come into Bitcoin has been institutional, or certainly through TradFi, meaning that we're getting Bitcoin ETF buyers and Circle stock buyers and Coinbase buyers, but that money can't really trickle down into spot altcoins. What we're seeing here with Bitcoin dominance is clearly a rotation from Bitcoin to Ethereum that I've been looking for quite a long time. And that's largely on the back of treasury companies. And of course, Thomas Lee emerging as somewhat of a Michael Saylor for the Ethereum world. Now, Ethereum being the second token by market cap after Bitcoin carries heavy weight in Bitcoin dominance. So most of what you're seeing in that Bitcoin dominance move is simply the fact that Ethereum has been outperforming Bitcoin over this stretch and continues to do so. Even today, we have Bitcoin correcting. Obviously, we had a high recently of 123. It's gone down into the mid 114s today so far. Ethereum was up. Ethereum Bitcoin was up as a pair, even if the Ethereum USD was flat at a point, and Bitcoin dominance is down. That is a very rare occurrence in the crypto market where Bitcoin drops and Bitcoin dominance also drops. Usually you see altcoins acting as somewhat high beta to Bitcoin. So if Bitcoin goes down, altcoins go down more. That's not what we're seeing at the moment, which does give us a hint, at least that we've seen a nice rotation into Ethereum. What it means for other altcoins is wait and see.
Yeah, it's not just a surge of capital into all risk assets, like you pointed out, Bitcoin kind of stalling. The NASDAQ I have here on the purple line is up 10.41% over the last month. And that is not, a contributing factor if you can look at the charts to the rise of Ethereum and other alts. So, I mean, something triggered this flow of capital into the alts, and that's what we're trying to investigate today. XRP is also making the news. And so is there a bigger macro picture here, or is this just a time of rotation?
I think it's a bit of both. It would be disingenuous to say that the crypto move is not buoyed by bullishness across all markets. I don't think they're correlated, but it certainly helps when everything's going up. There's a risk on appetite. M2 global money supply hit an all-time high again today, meaning that there's more liquidity in the system. I think we all expect more liquidity to come. We're watching Trump obviously bullying Powell for that, although I don't think that will happen. But everyone's expectation is that governments are going to cut rates eventually and continue to print money, and that's going to lead to even a further increase in M2. So I think we do have a perfect environment for this to happen, but what's happening in crypto is very localized. It started with, Trump becoming pro crypto. Of course, before that, with BlackRock coming in and filing for the ETF and getting approved, and then all of the ETF action. This is just a continuation of all of that. The new proliferation of that is some of these treasury companies, and Ethereum has the biggest narrative on the treasury companies right now. So I think
Yeah.
that the reason we're seeing these specific things in the crypto market are very easily explainable, and it's simply more demand and supply because of narratives.
The reason I'm asking you about what's happening or what's causing this rally is I'm trying to understand whether or not this rally is sustainable. Because if there are events-driven news, like maybe an SEC approval of something, or let's say, Trump's reversal of a tariff that could maybe trigger a liquidity boom back into risk assets, that may be short-lived. That may be an events-driven thing. People might buy the rumor, sell in the news. But if it's more fundamental, then perhaps it's longer lasting. Where do you stand on this?
I think this is very long lasting. It's actually surprising to see this bullish of price action over a summer. Seasonality kicks crypto's butt pretty hard generally. Usually you see very sideways price action, if not floating down. Even in what many consider the most bullish year for crypto, 2021, we had Bitcoin go from 65,000 to under 30,000 in that June and July period as it started to rise again. So we've had major flushes generally over the summer, even in the most bullish years. And that just hasn't happened this time. And I think that that gives credence to the idea that there's this sustained bid and that there's just new buyers coming in. So it used to be that you had to have increased interest from the same people that were already buying crypto to raise prices. We can see this. We know exactly where crypto buying's come. You can see the treasury companies raising $1 billion in a clip. You can see exactly how much MicroStrategy is buying.
Mm.
It's very obvious. There's just less people selling than there are buying, and that doesn't usually happen over summer. And we know that there's more coming. Charles Schwab announcing last week that they're adding Bitcoin and Ethereum spot trading. The magnitude of that announcement would have been earth-shattering in any other period for Bitcoin, but it's become so institutionalized and mainstream that it's not that surprising. Then JP Morgan coming with an announcement 3 days later that they're looking at Bitcoin, Ethereum, crypto assets as collateral for loans. Bitcoin, Ethereum, they're going to be in everyone's portfolio right next to their securities. You're going to be able to buy, borrow, and die just like a billionaire on those assets as a part of your portfolio. This is being unlocked to everyone. And now it's even spot, not just the ETFs that are being unlocked. It is a really wild time.
What Arthur Hayes said, founder of BitMEX. Ethereum to hit 10K and tear the market in new a-holes, says Arthur Hayes, BitMEX founder, sort of 10K this year. He said that the coming ETH bull run is about to tear the market a new a-hole since Solana rose from the FTX ashes from $7 to $208. ETH has been the most hated large cap crypto. He added that despite struggling last year, ETH was now popular with what you just talked about, Western institutional investor class. Is there like a reason institutions are going into ETH for the technology, or are they just going after it because it's the second largest crypto?
I think there's a factor of both. So I've been stating the same ideas as Arthur for a long time, perhaps not with as much gusto as he tends to do it, but I do believe 10,000 is possible. I don't know if that's end of the year, next March, 2026. The time frame is relatively unimportant to me. I do think it's going there and much higher. As for why the Western institutional investment is looking at it, it is the second largest. It's been there the longest. It was the first smart contract platform. It is viewed as the safest and most secure, regardless of gas fees. And a lot of the problems I think that people have had with Ethereum are retail problems. Like you're obviously not going to mint an NFT you're going to sell for $10 if the gas fee is 50 to do so. But I don't think BlackRock cares if the fee is $50 or $10 if they're tokenizing something that's worth $1 billion. Right. And so I think that there's a perception that it's the safest, the securest, the longest established. There's a native yield to it, obviously. And when you have Franklin Templeton and BlackRock tokenizing treasuries, this week we had an announcement that Goldman Sachs and BNY Mellon are looking to tokenize treasuries and money markets. They're probably going to do that on Ethereum as well, as all the speculation. It just seems to be the place that institutions would feel the safest to basically create these assets and to participate, right? I mean, I love all these other chains, but they just have never captured that level of serious interest like Ethereum has.
Yeah, and just some color to add to what you just said. And ETH ETF see $6.4 billion of inflows over 11 weeks. The surge represents nearly 72% of the 8.9 billion raised by these products since their debut in the US last year. So it seems like institutional investors have been kind of dormant on the ETH ETF ever since they've been launched earlier in the year. And it's just the last 2 months, 2.5 months, that they started piling in. And that goes back to your point about treasuries. Are they just strategically positioning now during the last 3 months to add to the treasury, which is why we've seen the surge of inflows that have contributed to the higher price? Is that it's just a matter of seasonality?
I think it's been more the last few weeks than last few months. I mean, that is
Yeah.
technically true, but if you look, I mean, it's only been the last few weeks
Yes,
that you've seen days
you're right.
where Ethereum ETFs are massively outperforming Bitcoin spot ETFs, not something that most people ever expected, right? You would think that on a good day for Ethereum, it would go from 20% of the flows to 50. But the fact that there's days where it's double or triple the flows, we had a day recently where Ethereum, I think, was had 300 million ish in inflows. I don't want to misquote it, something in that ballpark. And Bitcoin had over 100 million outflow, right? So that's a pretty big gap between the two of them. And I really think that most of this is that those of us who are Ethereum bulls have been waiting, I guess, for a very long time, couldn't understand why it was such a hated asset, as Arthur said, pointing at these fundamentals. And it really, I think, took Thomas Lee just going on TV and saying Ethereum is the new Bitcoin, which, by the way, I don't even agree with. I'm glad that it helped, obviously, the price action. I don't think Ethereum's a new Bitcoin. I think it's entirely different asset class, an entirely different asset. But him going on TV, seeing, Bitmine, his Ethereum treasury company, go up 3,500% in 5 days. Thomas Lee talks to every institution about every market. They're following his research. He's one of the few guys who could have made that comment and it would have catalyzed Wall Street to buy this asset. I really think that's what's created the tailwind. And then all the narratives that everybody's known all along finally look like positives instead of negatives in this new bull run.
There were all sorts of reasons as to why Ethereum underperformed Bitcoin in this current bull run up until basically recently. And some of it went back to Vitalik being eccentric and kind of leading the community astray is one reason. And I'm just quoting people here. The Ethereum revenue sharing model, it has been not great for its profitability. Inferiority of technology versus Solana and other like-minded tokens. And just a host of other technical problems. The ETH, the decline of the supply has not contributed to the rise in the price, which has disappointed a lot of people. And funnily enough, nobody's talking about any of these problems right now. So
Nobody cares about any problems when price is going up. We all know that. But Vitalik is a genius. He was there from the beginning. He likes to quip that, he was the founder of Bitcoin Magazine when you ask him what his job was, which is the case, to remind people that he was an early Bitcoiner. But as you said, he is extremely eccentric. He's a bit admittedly awkward. So when you have a Thomas Lee step in as sort of the front
mm,
man for Ethereum, it's a very different environment than when you have to depend on Vitalik Buterin, who's a brilliant programmer and thinker and one of the greatest minds of our generation. But he's not the guy that you want talking to Goldman Sachs.
so bottom line for the rest of the year, and we'll move on to some other alts. Are you more bullish on Bitcoin or the altcoin space? In other words, Bitcoin dominance continuing to fall for the rest of the
I
year?
think
We're
Bitcoin
not.
dominance. Yeah, I think we're going to see ebb and flow there, as we always do in the cycles. I would expect Ethereum to at least track Bitcoin's success for the rest of the year, though. I would be surprised if Ethereum versus Bitcoin went much lower. If you're taking a look at the chart, Ethereum versus Bitcoin made a higher high for the first time, literally since 2022 or 2023 here on the lows. I think if you're taking a look at the weekly, you've got, the 50 MA has been flipped for the first time in 3 or 4 years. So Ethereum really, beyond the fundamental narrative here, it
Yeah.
had serious technical breakouts on the higher time frame charts. It's a very compelling move here. I would be surprised to see it just dwindle back below.
Still underperforming Bitcoin on a year-to-date basis, despite this move, yeah, in the last month and a half. Let's move on to some Bitcoin companies. Bitcoin Standard Treasury plans to go public via a SPAC. That seems to be the route a lot of companies are taking these days. But Bitcoin Standard Treasury Company plans to go public as part of a deal with Cantor Fitzgerald that will make it the fourth largest public Bitcoin treasury. Bitcoin Standard Treasury Company CIO Sean Bill has more on the story. This is from Bloomberg. Bitcoin Treasury companies, that's the trend these days. Any significant impact on the price, or is it already baked in?
I think it's had a significant impact on the price. Once again, it's a lot of buying versus very little selling. I think I've been doing a lot of deep thinking about the Bitcoin treasury space and the altcoin treasury space, and I've been writing on it quite a bit. I was probably one of the first major critics of the Bitcoin treasury strategy because I just think it's very hard to beat Bitcoin, and taking on leverage to do so can only end one way. We've seen it in every single cycle. I love what MicroStrategy has done, but I don't think the 75th MicroStrategy imposter is going to do well at the top of the bull market. So I think that we have a few treasury companies that will do exceptionally well. The rest will probably end up puking their Bitcoin on the first 25% drawdown. Their shareholders will get wrecked, and we'll see if it has an impact on Bitcoin. So through my lens, I'm looking at this sort of differently. I think there's Bitcoin treasury companies, which are effectively hedge funds or financial engineering ways to buy more Bitcoin, which usually means taking on debt or leverage. There's Bitcoin balance sheet companies, which I'm a huge fan of because I think that that's how every entity, government, individual should behave. You just simply take part of your cash flow or part of your cash balance and you buy Bitcoin with it. I'm advising a company called Red Light Holland in Canada, publicly traded, to take a part of their $15 million cash balance sheet and slowly accumulate Bitcoin responsibly up to $1.5 million worth. Very conservative, very simple. They'll have 10% of their money in Bitcoin. I deeply believe in that. Now, actually, on the risk side, Bitcoin treasury companies don't make sense to me because it's very hard to beat Bitcoin, as I said, and Bitcoin doesn't have any sort of native yield, and there's no way to really make money using Bitcoin without taking on risk. Ethereum, Solana, altcoins are actually very different. So I think Bitcoin is a superior balance sheet asset and is a
Hmm.
superior treasury asset if we're using the actual definition correctly. But if we're being intellectually honest about what the treasury companies are, which is companies trying to beat an underlying asset in the market by taking on leverage or risk, I think that works a lot better on altcoins, actually. And I know that seems surprising, but Solana you can go and get
Yeah, I see what you
9
mean.
to 10% yield on Solana. You can beat Solana literally by simply staking and using Solana as it's intended. Ethereum only 3.5, but you can take Ethereum and you can earn a yield by staking it. You can go into DeFi and Aave, earn a larger yield, very safe with smart contracts. And you can go then potentially, if you believe NFTs are coming back or any of these other narratives, you can go outperform Ethereum there. And none of that even requires leverage. It just requires raising money and buying the right asset or utilizing your treasury correctly. So I think, do you want to have Solana as a global reserve asset on your balance sheet in 50 years? Probably not. You do want Bitcoin for that, in my opinion. But if you're trying to beat an asset over the cycle, I think these altcoin treasury companies are far more interesting.
Companies like Strategy, Michael Saylor's Strategy are issuing convertible bonds, Bitcoin convertible bonds. So it's not directly generating yield, but it is providing the company with more liquidity through issuing bonds. So it's kind of a way to create money for your treasury.
Yes.
Interestingly, this is look at this BitcoinTreasuries.net. Number six, Trump Media and Technology Group, DJT, apparently the sixth largest holder of BTCs in the world at 18,000. I don't really have a specific question. I just want to get your reaction to this.
Yeah, it was recently announced that of their $3 billion available cash, they've put $2 billion into Bitcoin. That's, two-thirds, 66%, much higher than even the most aggressive of companies generally that have actual cash flow and are not viewed as Bitcoin treasury companies per se, but have real businesses. Clearly, the Trump family has the bulk of their net worth now in crypto and Bitcoin. They were buying Ethereum all the way down. If you notice, they have World Liberty Financial. They're buying Bitcoin miners. They're all in, but they've realized that crypto, for better or for worse, depending on how they're using it, is a better way for them to make money than real estate. I think we're seeing a wholesale rotation. Interestingly, Bitcoin maximalists will point to the fact that the Trump Media Group are altcoiners to some degree, but they're moving those profits massively into Bitcoin, which is kind of part of the ethos of trading around your Bitcoin position to get more, which we can agree with or not agree with. But no matter how you view this, two-thirds of their available cash for Trump Media is in Bitcoin now.
it's I don't know if it's a better asset class than real estate for them or for people in general. And I'll let you answer that. Kind of just an investment philosophy question because the Trump family has had well, they faced a lot of hurdles ever since Trump ascended to the presidency, not just this term, but the second term as well. When it comes to the real estate business, a lot of people who didn't like Trump just would not support the real estate business. So he's had troubles with his hotels all around the world, his other properties. And so a rotation kind of strategically makes sense for the Trump family. It doesn't make sense for the average Joe, though.
Listen, for the Trumps, you can take a cynical view or a positive view. You can say that they identified an opportunity. The cynical view is that it's grift and they can manipulate and control the market and make a ton of money. And I think the Trump token launching days before his inauguration is a pretty early indication that's how they were viewing it, certainly in the beginning. Buying a lot of Bitcoin, maybe they're maturing as many do in the crypto space. I think it's a far better investment at this point than real estate. I think it's very clear. I think everybody's waiting for a housing crisis in the United States that's yet to come. I can't speak to whether that will happen, but we know that housing is the most expensive it's ever been, at least for personal homes and residential. Commercial real estate still somewhat of a disaster. You'd be hard pressed to view buying real estate writ large in the United States as a good investment here with the current rate environment and the current supply versus demand dynamics. There's also no property taxes on your Bitcoin, right? I mean, the idea of ownership of real estate can be somewhat farcical depending on the expenses associated and the fact that you need to pay for the right to own that property via taxes. That doesn't happen on your Bitcoin. So I think that if you're looking at one or the other, go rent a house and buy Bitcoin.
Yeah, I tend to agree that they're different assets. It's for different people, and there's no direct correlation with the stock market observable with real estate, depending on where you live. So that's one way to
Agreed.
diversify. Take
It's
a
a
look at
hyper
Exo.
localized market and it really
Yeah,
depends on someone's needs. I would never tell somebody to forego a beautiful house to raise their kids in just to buy Bitcoin, right? So it really depends on the individual. But as a sheer investment, I would take Bitcoin over real estate.
yeah. We spoke to the Cardones about this exact issue, and Grant was like, "Hey, can you sleep in a Bitcoin? Can you sleep in a Bitcoin?"
And
No.
Grant tells you, and his brother will tell you to rent.
Yeah, yeah.
Gary will be, Gary, we don't live far apart. We're very good friends. He'll tell you, rent a house, sell your house, buy Bitcoin, get it over with.
Just sidetracking. Do you agree with that philosophy?
I mean, you need a house first, right?
The
I
well,
think,
the
like I
American
said,
dream is to buy a home. I mean, maybe that dream has been
I think that dream is
missold.
out of reach for most people and has
Hmm.
largely changed. It's not the 1950s anymore. Nothing about
Mm.
America is like the 1950s. So, we know that most of these college graduates are living with their parents right now. Nobody's really looking to buy houses. They're looking to rent or find a cheap way or live with roommates. So, I just don't know if that's the American dream anymore. And once we have everyone has AI girlfriends, they're not going to need houses for their wives anyways. So, maybe you just live with your
Yeah.
parents, have your AI wife, and move on with your life.
All right. Anyway, moving on to Ripple. Can you see my screen, Scott?
Again,
With the chart? Okay, great. Ripple hit new all-time highs. It did before it came back down. Just a lot of news surrounding Ripple. Sorry, XRP rather. XRP is what I meant to say. Ripple co-founder now in the news for allegedly dumping a whole bunch of XRP near highs. That may or may not have contributed to this decline. I'll let you comment on that. It's been the news for the lawsuit with the SEC as well. And then we can talk about this particular piece of news as well. XRP holders can now soon earn 20% yield on their tokens. But let's talk about this dump by Chris Larson. Shifted
par for
50
the
million
course.
XRP to exchanges. Yeah.
Par for the course for Ripple. I can't speak specifically for Chris or for Brad Garlinghouse. And listen, Bitcoiners will point to the fact that Bitcoin has no founder, and you don't have to worry about this kind of thing if you simply buy Bitcoin. It's one of the largest points of contention versus Bitcoiners and altcoiners. We've even seen the Ethereum Foundation historically be excellent traders of their own asset when they need liquidity to fund operations. They tend to sell the top, and that might not be a coincidence. And similar here. There's been long criticism. I've never looked deeply into it that, every time XRP used to have a major move to the upside, you would see the company or XRP Foundation, I don't know what the particular vernacular is for it, but they would send Bitcoin to XRP, excuse me, to exchanges and they would sell it on the open market and sort of dilute that upside price action by taking profit. This is no different in this case, perhaps, than Jeff Bezos selling Amazon stock or, Elon Musk selling Tesla stock to fund their life. You can agree with that or disagree with it, but that's what's happening here. Whether it's the catalyst, I'm not sure, but it is interesting that XRP did make a new all-time high and then dumped. Usually, if you're a trader, you want to see those breakouts sustained, and you don't want to see price dropping back below them. But clearly, XRP beat the SEC. That was a huge catalyst for this entire bull market and everything that's happened. Massive donators to politicians, much like all the other institutions in crypto. So they've certainly participated in a more favorable environment for crypto in general. As a standalone asset, individuals can judge whether they want to use it or not.
Well, let me just add to your remark here. Maybe Bitcoin doesn't have a founder, or at least one identifiable. And it does. It has Satoshi Nakamoto, but we don't know who that person is. But it does have owners now, in the sense that these Bitcoin treasury companies are going to be the dominant hodlers of the asset. And so if they start pulling a Chris Larson or Brad Garlinghouse, I mean, you know where I'm going with this, right? Isn't this an
Yeah.
existential risk?
Many people point to strategy being an existential risk. I mean, he owns a serious percentage of the supply. I think, 3%, just sub 3%. But when you look at obviously lost coins, over 3% of the supply. If MicroStrategy strategy was forced to sell, I think that could be problematic. But I really think that he
Yeah.
intends to never sell. I think he intends to hoard as much Bitcoin as possible and then create a Bitcoin bank, full suite of financial services with the largest holdings of anyone to do so. The others, as I pointed to earlier, I do think that is a risk. If Bitcoin has a serious drawdown and the financial engineering that these companies have used to raise money to buy Bitcoin, if that's forced to unwind and they're forced to sell, I think that could be a risk to Bitcoin. But I think that would be a short term thing. For example, if Bitcoin goes down 30 or 40 or 50% as a normal cycle drawdown, that could be exacerbated by another 20%, right? A 30% drawdown becomes a 50% drawdown because these are sellers, but Bitcoin's always absorbed any supply and more, any selling pressure and more. And you got to remember now, it used to be the long-term Bitcoin holders that were the buyers of last resort. You always knew there was some sort of floor where the Bitcoin billionaires would step in and buy as much as they could. Now those are actually the sellers. Most of those guys are the ones who we've seen selling huge amounts of Bitcoin or contributing to Bitcoin treasury companies, which is a cute way of selling. But the buyers now are all these institutions waiting to come in, just sitting on the bid. So I think we have a higher floor. And I think that if any of these collapse, the bigger ones will probably consume them.
How do you feel about these earned products? It's not just XRP, it's Bitcoin, it's Ethereum. I mean, Ethereum has staking built in, but there's other layer twos. Layer twos for Bitcoin's yield farming is now has always been popular, but it's surging now. But take a look at this. Now you can earn apparently up to 20% yield on XRP through
Mm.
this lending
It
market,
reeks.
more markets.
This reeks
Yeah,
of
you don't like
aluminum.
it?
I don't know. Listen, people, as long as people understand the exact risk, they're transparent and disclosed of what they're doing, Godspeed, right? I believe that
Yeah.
individuals can make their own financial decisions to be responsible for their own money. 20% yield just gives me the creeps, right? It makes me cautious. We've seen this story before. I was a pretty outspoken Voyager creditor, and they were, chasing 8, 9, 10% yields, not 20% yield. So there has to be risk. If you don't know what that risk is, there's a problem here. You can't just
Mm.
passively earn 20% with zero risk. It's not possible in any market.
Yeah. Understood. All right, let's move on. We've talked about dominance. We've talked about yeah. Let's move on to let's return to this tokenization story that you referenced earlier. Goldman Sachs, BNY Mellon collaborate on tokenized money market products. Where are they going with this, Scott?
We don't know what chain they're going to do it on. I would assume Ethereum, but this is the tokenization of everything narrative that we know is coming. And interestingly, when BlackRock filed for its Bitcoin spot ETF, it made huge news. But what didn't make as big of news was the letter that Larry Fink had just written, the annual BlackRock letter that talked about the tokenization of everything as extensively as he talked about Bitcoin spot ETFs. So Larry Fink and many others have long been proponents or believers that everything would be tokenized. It's a superior way of trading. Stablecoins have really been the first and clearest iteration of that. Everybody who's used a stablecoin doesn't understand why you ever need to send a wire transfer again, right? Especially if I'm sending $5 from myself to somebody in Nigeria. It's fast, cheap, it's easy. There's no middleman. That's what's coming with the tokenization of everything. And these are just the first glimpses of how that's going to be used. This is the safest market for them to enter through, money market and treasuries, things they're familiar with. But this is an unstoppable trend. We're going to see these announcements day by day by day with new assets, new banks, new institutions. BlackRock, as I mentioned before, has BUIDL already well over $1 billion, maybe two by now in tokenized treasuries. This is what's coming. This is the next big narrative, and it's led by stablecoins.
Using tokens representing the value of shares of money market funds on GSDApp would enable us to unlock the utility as a form of collateral and open up more seamless transferability in the future. I mean, they could already do all of that with TradFi. Why tokenize assets to unlock utility of real world assets here?
Faster, cheaper,
Mm.
easier, and there's certain things that really are difficult to use as collateral, and once they're tokenized, they can go into a vault with everything else and be used as collateral in a bucket, and that's what people want. They want to be able to take a loan, they want to be able to earn yield. Think about being able to do that with your house or your car or any asset that you own, be able to take a loan against it as a part of your securities portfolio. It's all tokenized and collateralized. That's what's coming. Everything's going to just be a wallet.
JP Morgan recently announced that they're starting to allow deposits of crypto, if I'm not mistaken. Not full stop, but they're just tipping their toes in the water. Is that the next
They're
trend?
in. They're
Yeah,
in. JP Morgan already year or more ago had allowed their high net worth clients to buy Bitcoin and Ethereum and such. As much of a critic as Jamie Dimon is, he also is a CEO and has a fiduciary responsibility to his shareholders and understands what trend is coming, regardless of how he feels about it. Like I said, JP Morgan is looking at collateralizing Bitcoin, Ethereum, and cryptocurrencies as assets. There you go. Evaluating plans to lend against crypto assets like Bitcoin and Ether. JP Morgan behind the scenes already has a JP Morgan coin that they use for cross-border payments. They've been using blockchain technology and tokenized assets longer than most people because they know that it's cheaper, faster, and you can do it on a weekend. So regardless of what they say publicly, they've been all in behind the scenes for a very long time. And this is just the next inevitable step of that, especially, as I said, following Charles Schwab's similar announcement.
for sure. I mean, this is data just this week. JP Morgan Chase reportedly evaluating plans to offer loans backed by cryptos. According to a report by the FT, the bank may begin lending against cryptos such as Bitcoin and Ether by 2026. This just seems like a logical next step for all banks, not JP Morgan. If I'm already involved with Chase, if I already have a deposit with the Bank of America, allowing me to on ramp into cryptos with the money I already have without having to go through
Yeah.
another exchange or another wallet, that just seems logical. Why aren't they doing that already?
A logical, absolutely. I think they were waiting for legislative and regulatory clarity, maybe clarity on custody. Remember, we had SAB 121, which was that SEC memo that didn't allow these banks to custody crypto as a asset. They had to view it as a liability, which meant having equal cash on the other side of the balance sheet. Nobody's going to do that. You're not going to custody $50 billion in crypto for customers and then have to raise $50 billion cash just to do it. So that was changed, as Trump came in and Hester Peirce at the SEC very quickly reversed that memo. So I think they were just waiting for the right environment to be able to do it and to do it safely. But the real unlock there, as I said, isn't just the fact that you can move your Bitcoin and Ethereum over there or buy and sell. It's that it becomes a part of your entire portfolio that you can take a loan against because that's how wealthy people operate. They don't sell assets, they buy, borrow, and die. And if you can do that with your Bitcoin next to your Tesla stock, next to your retirement fund, that's going to be massive for the space.
All right, finally, let's end on some legislation. Here, some disappointment with people expecting the approval of Bitwise ETF. The SEC halted that. Key U.S. regulator halted the approval process for a new cryptocurrency exchange traded fund just hours after initially signing off. In a setback that for digital asset proponents, they've been going back and forth for months now. This latest setback, perhaps just a temporary setback, perhaps just some halting for more clarity, but maybe there's a deeper shifting of attitudes here. What's going on?
I actually had Matt Hogan from Bitwise on my
Yeah.
show yesterday to ask him specifically about this, and he unpacked it pretty well. I think he called it the greatest 42 seconds of his life because the product that everybody is looking for is indexing. That's how people in TradFi invest. That's how people view their 401k. You buy an index fund that gives you broad exposure to an asset class. You fix it, you forget it, you dollar cost average. This was going to do that because the Bitwise 10 was going to take basically the top 10 assets as being converted to an ETF. You could just buy a basket ETF. It'll naturally rebalance on the top 10 assets, primarily Bitcoin and Ethereum. Voila, you have exposure to the top of crypto, the least risky assets per se. But then it was immediately paused. He said that basically it gets reviewed and approved, but there's some strange rule where an individual commissioner, and you don't know who, can basically put the brakes on something. And that's what happened here. And it's indefinite, although that doesn't mean it couldn't be approved in a week. He gave kind of a negative view and a cynical view of why this would be happening because he didn't really have inside baseball on it either, but this is how they're sort of viewing it. The cynical view is Carolyn Crenshaw, a Gary Gensler leftover, just wanted to keep Genslering the industry and had the opportunity to do so and halted this, and we have no idea what's coming. I think the more positive view is that Hester Peirce, Atkins, Uyeda, obviously we have a pro crypto Republican SEC commissioner group that they have been talking about for weeks, the fact that they're trying to create a very clear framework and a very clear framework for approving ETFs. So basically, you don't have to necessarily submit and have the committee, go through it. There's a framework, and as long as you fulfill all of the items in that framework, you get approved, right? And so their thinking is that maybe they just pause this until they have that framework ready because they don't want to preempt it. So that makes a lot of sense too. So let's hope that that's the case here, that they're going to put out very clear guidance on what can and can't be approved. And then people will just know they're going to get approved or rejected when they decide to file because they've either followed the rules or they haven't.
Well, this final piece of news may provide some more clarity on what you just talked about. Scott, Trump's crypto working group set to deliver a report. The report could recommend ways for the government to build a Bitcoin stockpile. This is as headed by Bo Hines, group's executive director. It's coming out July 30th, capping a 6-month window by the president's newly formed digital asset task force. What are you expecting to come out of this?
Well, I'm hoping that we'll get the audit on the strategic Bitcoin reserve or how much Bitcoin the United States government holds. There was sort of this negative story that came out last week that the government had likely sold off all their Bitcoin except for 30,000. So basically sold 170,000. But when you took a deeper look, that was just the U.S. Marshall holdings that were divulged through a Freedom of Information Act. And we know that Trump, in his executive order, said everybody send your Bitcoin to the Treasury. So we don't even know how much the Treasury holds. We don't know how much any of these other agencies hold. That was, I think, the thing that people were looking for the most. But basically, this was a question to every agency that had some sort of crypto exposure to send a report into the president, into this working group, and to see where they stand and what they have and their plans moving forward. So listen, the deadline for that was this week. They met it. Pretty shocking. I think, regardless of your thoughts on Trump, he has delivered on his promises regarding crypto. And it'll be interesting to see what this is, but I think it'll generally be positive.
Finally, let's close off on your work. What else are you following and covering on the Wolf of Wall Street's podcast? You mentioned you had Bitwise CIO Matt Hogan on yesterday. Great guest. What else is new for you, Matt? Sorry, I just called you Matt Scott.
To be honest, you covered almost everything that was worth covering this week. I just find that, as I'm sure you do, my potential guest list is improving and increasing every day. It used to be that you would have the same 10, 20 people on over and over and over again, but there's so many more people in our space now that you can talk to. It's incredible. For example, this Sunday, my podcast, which I recorded a couple days ago, is with Rick Edelman, who's the Michael Jordan of registered investment advisors and recently made waves by saying that people could or should have a conservative crypto exposure of 10% up to an aggressive of 40%. I wouldn't have thought to have Rick Edelman on before or had the access. You're talking about a guy who 300 billion under management, 300,000 private RIAs. Listen to this guy like gospel. He's out there, pounding the pavement for us. So I think it's just exciting to have new, incredible guests that we can talk to about this space and about everything that's happening. And so just looking to continue to expand there. And I think the institutionalization here is going to continue to be a story for a very long time.
Are you seeing more interest in your channel? Channels like yours are a good proxy actually for retail interest, believe it or not.
I think slightly. My channel is
Mhm.
very unique, to be quite honest. We've seen it in the metrics, we've seen it in going to conferences and the people that approach me. When I started, it was very much a trading channel. We talked about altcoins and charts and all these things. And over time, I very much shifted intentionally to being the adult in the room, interviewing the brightest minds. And so my fans and listeners and viewers, although I think there are less of them in the world, are 40 something, 50 something people with kids, very serious investors who have a Bitcoin exposure and are looking to increase it, who also deeply understand macro and TradFi. So it's not really the anonymous avatar crypto degens who are flipping meme coins on Solana. I'm pretty dismissive of that. So I don't really think I have a crypto audience per se. I think it's really at the crossover, which is what we try to accomplish.
This crossover is kind of indicative of the market right now. It's crossing over into traditional realms where you're on-ramping, where the industry is seemingly on-ramping a lot of people right now that were not previously involved in even in the last bull market. I'm talking about not just institutions, but on the super wealthy individual level as well. But anyway, great talk, Scott. So let's follow you at Wolf of All Streets on YouTube. I'll put the link down there. And where else can we go to follow you, Scott?
The primary place is X. Everything's branched off from there. It's at Scott Melker on X.
Perfect. Links down below. Thanks very much, Scott. Speak next time.
Thanks as always.
Thank you for watching. Don't forget to like and subscribe.